Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 14th, 2025, and we're diving into Sigma Lithium's Q3 2025 earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Sigma Lithium is a key player in the lithium market, especially with its focus on sustainable production. I'm excited to discuss their latest financial performance and strategic initiatives.
Revenue and profitability overview. Let's start with the revenue figures. Sigma Lithium reported net sales revenue of $28.5 million for Q3 2025, marking a 36% increase year over year. However, they also reported a net loss of $11.6 million. John, can you break down these numbers for us?
Absolutely. The revenue growth is impressive, driven by higher realized prices despite a 15% decline in sales volume to 48,626 tons. The net loss, however, is primarily due to increased cost of goods sold and other operating expenses, which offset the revenue gains.
What about the cost side of things?
The cost of goods sold was $30.1 million, reflecting a 3% increase year over year. This was mainly due to lower production volumes, which increased the per-ton cost. Additionally, other operating expenses rose significantly due to prior period tax obligations.
Operational efficiencies and future outlook. Moving on to operations, Sigma Lithium produced 43,998 tons of lithium oxide concentrate in Q3. They also reported ongoing progress in their Phase 2 expansion. How is this shaping their future outlook?
The production was slightly impacted by mining operation upgrades, but the Phase 2 expansion is a significant growth driver. Once completed, it will increase their production capacity to 520,000 tons annually. Additionally, their CIF China cash operating costs are below target, which is a positive sign of operational efficiency.
And what about their financial health?
They've been deleveraging effectively, reducing total debt by 7% this quarter. This positions them well for future growth and investment in their expansion projects.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 9 cents, but Sigma reported an actual EPS of 10 cents. What does this mean for the company?
This slight miss of 1 cent against the forecast indicates some challenges in meeting market expectations. However, given the strategic investments and operational improvements, this might be a short-term setback as they continue to focus on long-term growth.
How are analysts reacting to this?
With only 2 analysts covering the stock, the reaction has been muted. The focus remains on their expansion plans and the potential for increased production capacity, which could drive future earnings.
ESG initiatives and community engagement. John, Sigma Lithium has been vocal about its ESG commitments. Can you tell us more about their initiatives?
Absolutely. Sigma Lithium is deeply committed to environmental sustainability and social responsibility. They have several ongoing environmental programs aimed at conservation and pollution control. Their social programs focus on community development, including education and infrastructure improvements.
How does this impact their business?
These initiatives not only enhance their corporate image, but also strengthen community relations, which is crucial for long-term operational success. It aligns with the growing demand for sustainable practices in the mining industry.